What's up guys, it's Matt. So this video will be the ultimate guide for the break and retest strategy. So I'll explain what this is and all of its different variations, as well as how to apply this as a technical trader. So if you enjoyed this video, please be sure to drop a like and subscribe to this channel. And so before we get into the details of the break and retest strategy in just a minute, let's start off with some basics. And so anytime that you have a trend in the market, you can either have a bullish trend or you can have a bearish trend. And so if you have a bullish trend, what this is normally composed of is a series of higher highs and a series of higher lows. And as long as price action keeps forming higher highs and higher lows, this trend will continue. And the same can be said for the bearish trend, except for bearish trends, it's the opposite of where you have a series of lower lows and lower highs. So essentially what's happening is that as price action is pushing to the upside and we form higher highs and higher lows, each time that we form a new high, so a higher high, what we're basically doing is we're pushing past the previous high. And that's pretty obvious, right? You can't have a bullish trend that's forming higher highs without testing and pushing past the previous levels of where we previously had a higher high. So originally, before we had this bullish trend, maybe price action was fluctuating within this range. And so at the time, the market structure was bouncing in between two different price regions. And so due to the fact that it's a range, this means that there was no trend and it was moving sideways. So the market structure didn't really change until we broke past these previous highs. So they might have acted as resistance in the past. So now that we've broken past them, the market structure at this point was now broken. And so now when we pushed to the upside, we tested a new price region where once again, price action got rejected, pushed back down to this previous level that is now broken, and it retested and it rejected this level and it continued pushing to the upside. And we can see that the same thing happened over here. Once again, we needed to break out of this price region, and now we're once again retesting it. And so the same thing applies for a bearish trend where initially we're pushing to the downside and we rejected this region that acted as support, or perhaps it might have been a demand zone, and then we retraced, we rejected this region that acted as resistance, and now we pushed to the downside. But since price action broke out of this price range and we formed a lower low, the market structure has now changed. If we want this bearish trend to continue, well then what we need is we need another lower low, right? And so what we need is we need this current market structure to once again become broken again. And so if you have trending market conditions, well then a break and retest strategy is where you would wait for the price action to break out of a region of past resistance, or if it's in a bearish trend, this would be a region of support. So you would wait for a higher high to form or a lower low to form, and then you would wait for price action to drop down and to retest this broken level of market structure. And so you would have past resistance that likely is now to act as current support if it's a trend that's going to continue. And the opposite is true for a bearish trend where you had support that is now broken, and you would likely have a region that once again will act as resistance. And so this is where you could look for a potential trade entry that's going to give you a better entry since you're trading within the trend, but you're entering during the corrective phase. Now the break and retest strategy is quite similar to a simple breakout strategy. So for those of you that are wondering why you can't simply enter a buy stop or a sell stop order above a previous high or below a previous low and just catch the trade sooner, well, there are pros and cons to being a breakout trader. So it all comes down to personal preference. But if you wait for price action to break and retest and ideally give you a sign of a rejection, well then you're less likely to encounter any sort of false breakouts. And in the previous example, it was incredibly obvious to us that price action had pushed significantly above the previous high or significantly below the previous low. But in a lot of cases, you might have a situation of where price action just slightly breaks out of a previous price region. And this is where you have to assess the entire market structure and decide whether or not this is a break and retest opportunity that you want to take. And so in this case, we could see that price action just slightly pushed past above this previous high, but technically it moved outside of this price range. So let's assume this is a region of resistance. So we're not looking at a single level, but a composite of different price levels. Well, then at this point, depending on what your trading plan is, this is where you have to assess whether or not you want to enter at the break and the retest if you get this type of move. And so ideally, if you see a stronger and bigger breakout to the upside above a previous level of support or resistance, well, then it's less likely to be a fake out. And then obviously this is where it would be much safer to wait for a rejection instead of simply entering as soon as price retests this previous level of market structure. And I just wanted to show you guys a few examples of the break and retest, or a break and retest and rejection being used as a strategy. Now, one point that I did not mention just yet, which I'll cover in this one, is the importance of waiting for some type of candle close. And the reason why is because if you wait for some type of close, well, then it's a bigger confirmation that price has perhaps broken out of a zone. And so if we start on the upside over here, we can see that at one point, this was a few months ago, Euro USD was forming higher highs and higher lows, and then it started to range. And so at this point, if you were looking to enter a sell position because you felt that Euro USD was in a range and you thought that it would push back down to the downside, and part of this would tie into the weekly market structure. So it's important that you look at the higher market structure as well as what's going on the lower time frames. But anyways, if you were looking for an entry, the best time to enter would have been to wait and see if price action breaks out of this range and it retests it and it shows you a sign of a rejection. This is perhaps where you would be looking to enter a sell position. And so if a market is moving sideways and you have a range, this means that it's fluctuating between two different zones. But basically, if it's inside of a range, the only time it's going to move out of a range is if you have a significant break out of the range, right? It's pretty obvious. And so if we have two different zones drawn, you want a significant break outside of the zone like we got over here. And in some cases, you would have your retest if you're not a breakout trader. And then this is where you would watch and see if there's some form of a rejection. Because if we look at it at this previous example of where price broke out of this range, but we never got a significant close outside of this zone, well, then this is where we'd be in for a trap, right? This is where you would fall for a fake out. But by waiting for the break and retest, it's a lot safer. Now, this doesn't mean that for every single breakout opportunity, if you wait for a break and retest, this doesn't mean that you're going to catch every single move, right? And those are simply the pros and cons of either being a break and retest trader or a breakout trader, where a breakout trader will catch every single move for the most part, but is much more likely to encounter fake outs, where a break and retest trader will not catch every single move, but you're much more likely to succeed since you're not going to fall for every single fake out. But anyways, if we continue down this path, we can see that after a drop down, it rejected this daily level. So if we look back, this is a region that's been rejected multiple times on the daily chart. And that's where we retraced a little bit past this region of this daily zone. So this is where we got this significant, let me zoom in. So this is where we got this significant bearish close that actually formed a lower low. And now we got a retest and signs of a rejection. Now, what are some signs of a rejection? Well, this is a little bit subjective and it depends upon what your trading plan is. But what some people like to do is they will wait and see if, so in this case where we had this bearish candle that broke out of this zone, what they would wait and see is if there's some type of candlestick pattern. So they would either wait for some type of hammer or a pin bar or an engulfing setup. Now, I'm not a huge fan of memorizing all of the different types of candlestick patterns, which I've covered in a previous video. But if you look at the overall context, so in this case, we're looking at the overall market structure and the overall context of this trend, well then they can be useful on a smaller time frame to show you signs of perhaps an exhaustion. So at the retest, when price action, so when the bulls were pushing to the upside after the bears created this lower low, this is where you can see signs of exhaustion, of where you don't have any of these significant bullish candles and there's wicks to the upside. So another sign of perhaps a rejection to some people is waiting to see if you have a significant wick. So these are a few signs that you could use, but in this case, this would be another entry point if you were a break and retest trader. And now if we go down this list and we continue following the market structure, and so price action was essentially ranging in between here. So here's an example, if I zoom in, of simply being a breakout trader and not waiting for any type of retest and a rejection. So anyone that had perhaps a sell stop order set right below these lows, they would have encountered a false breakout because you never had a significant break followed by a rejection. And so you can see we did break below these lows, but then price action closed within the zone. A close shows you signs that the bears attempted to push back down, but by the end of the day, the bulls did not want to push the price further back down. So I hope you guys found this video helpful. If you did, then be sure to drop a like and let me know if you would perhaps like a part 2 of where I go more in depth into break and retests, because there's a lot of different variations for it and there's different types of examples. And for those that want to join my trading community, the links are in the description to the Discord app as well as the Telegram app. Thanks for watching. I'll see you in the next one.